Hey guys, Mike here. So, about what a day in the market on Friday. I think every index, including the equal weights, hit a new all-time high, if I'm not mistaken. Even the Qs, huge divergence between that and the Dow and that and the S&P. But definitely healthcare and other things pushing this market up. So interesting to see healthcare stocks, tech, pretty much anything you can imagine going up. But that's the kind of market we're in, especially the high beta stuff going up. And some of you guys asked about those stocks like Irene and OKLO, BBAI. We'll get into some of those. UPS. I mean, there was a boatload of stocks you asked for, so we're going to try to get through them all. Very good questions, by the way. We're also going to get to Tesla. Nice red day for that one. But I want to start off with this right here. It's always mind-blowing to me. And again, a lot of us have participated in this, and that's fine, and we're happy. But it is not a good thing for America, folks. I always say never forget where you come from and never forget the stats, okay? So just listen to this. This is how much, the wealth has shifted around. And we'll talk about why that's not good in the long run, of course.
We're going to start with the top 10%. They added over $5 trillion in wealth. We're going to start with the top 10 here that everyone is going to love. So we're going to start with the top 10%. They added over $5 trillion in wealth in the second quarter, driven mainly by stocks. All wealth groups, that's every wealth group in America, saw gains in the quarter, with the bottom half of Americans also adding about $150 billion to their wealth. That was just in the quarter. The fastest growth, of course, is at the very top. The top 0.1%. So those are folks worth $46 million or more in total assets. They've seen their wealth nearly double since 2020 to over $23 trillion. Stocks accounted for virtually all of that growth. The top 1% own half of all individually held corporate equities and mutual fund shares. The top 10% own 80%. That share has remained fairly consistent. The top-heavy wealth creation has led to a top-heavy consumer economy. The top earning 10% accounted for a record 49% of total consumer spending in the second quarter.
Just think about that number, $5 trillion. Like, you're sitting there going, hey, well, we're at $6 trillion. We're going to double that in 5 years. I mean, just mind-boggling. Okay, now, why is it not good? All right, I'll give you two reasons. This is one right here, and listen to what he says about what you see the wealthy doing right now. And this is that Tagger management, okay, Tagger group.
Do you have any visibility on what maybe the next thing? Private equity has been growing. Where are people turning to?
I think in this rotation, people are going a little more caution. When you've created as much wealth as our members have, average member over $100 million, they're looking to preserve wealth first and foremost and grow it secondly. So the growth part is less important than preserving what they have. That's a good rule. If you can keep what you have, you'll do pretty well.
Is it then the return of capital more so than the return on capital?
It's making sure that you're not taking crazy risks that set you backwards. It's much harder to make up lost ground.
And so that's what we got to look out for. Because remember, these people got plenty of advisors dealing with their money. And so if they see stuff on the horizon, they're going to get even more cautious and start trying to pull stuff out and put it in other places which are safer and things of that nature, which will obviously affect the stock market since they own so much of it. So that's one thing to watch. The economy is the same way. I mean, when you have the top 10% making up almost half consumption, really? Like, how long can that be sustained for? Because guess what? They can only buy so much food, so much of the everyday stuff. They're only going to buy so many cars and houses, right? While the rest of the people, and if you listen to a lot of people, we already knew there was two different kind of economies. I've been saying it for 4 or 5 years. But, how much longer can that be sustained before you start to see the economy do this? Because those folks are pulling back. And since they make up a large amount of consumption, and we have Delta reporting this Thursday coming up. And so, like I was telling members, when they're talking about people flying, I put some stats in my little weekly update and stuff like that. But you think they're talking about people who make less than 50K, less than 75K, which is a huge portion of the population? No. I mean, they may take one trip, but they're not flying, multiple trips when the top 10, 20% have increased how many times they're flying, especially for business and stuff. So, that's why it's throwing a lot of these metrics off that you use in the past, or we've used in the past, and go, wow, that's still going. How come the economy's still going right now? It doesn't make any sense, because you listen to people that make less than probably 100K, really, but definitely 75K or less in most states. They're like, dude, what's going on? We're not enjoying this. We're broke. And these prices are crazy, right? It's because of those stats, because all that wealth got shifted up, and it continues to get shifted up, and they continue to be a larger portion of the economy. Remember, 20 years ago it was only 36%. So in 2 decades, It's gone from 36 to almost 50%. It'll continue to climb at this rate. So, and I love this right here from Evan at Stock Market News. He said, Elon Musk is worth $500 billion. Mark Zuckerberg just got a $180 million quarterly dividend check. Jeff Bezos recently spent $50 million on his wedding. I just made 50 cents making a post talking about how much money they have. We are not the same. I mean, but that's just where we're at. I mean, think about this. Elon Musk is worth as much as OpenAI now. Okay, an entire company. So amazing society we live in here. So let me know your thoughts on that, guys. Now, going on to the first question, I really appreciate your videos, Mike. I watch them every day. I have a question about corporate buybacks from companies like Apple. Are buybacks on a scheduled time frame regardless of the price of the stock, or are the companies allowed to buy at any time to support price? It's going to be different for every company. The only thing we will find out that I'm aware of in the public disclosures is how much money they approved, what the timeline is, the window that is. But I've never seen anybody send alerts out saying Apple bought stock at 201, they're $220, anything like that. And it's at every company's discretion. I'll tell you this, I know JP Morgan, they said right here, it was Jamie Dimon in May 2024, Dimon was asked at an investor meeting about boosting the company's share repurchase program. He declared, we're not going to buy back a lot of stock at these prices, explaining that buying back stock of a financial company at a valuation significantly in excess of 2 times tangible book value would be a mistake. And so it is different for every company. And normally you're not going to see companies, because they want to get the most bang for the buck as they can, buying up here. Okay, they'll wait for the pullbacks, support levels. You would think that'd be the smart thing to do. That way they only have so much money to do it, and they will buy. And some companies may just buy all the time. You just don't know. So that's what I know about that. Now, next thing, here comes one of our members, Cynthia. Says, hey, Mike, thanks for the video. A couple questions on Upstart. Can you explain that formation you're seeing that you like so much, and what do you look for when going long? Also, when you mentioned that you want to see a stock breakthrough, either a trend line or moving average, do you look for it to break and hold through close before you take a long position? And then somebody else also asked about Upstart right here. It was Peter. Could you break down Upstart? It's getting crushed. And before I forget, Cynthia, I will do a members video on your second question, okay? But I will cover Upstart today and this formation, or 2 formations I really like. One is the ascending triangle chart pattern, which wasn't on Upstart, it was the opposite. I'll show you, but I talk about this with AMD. I love it because you're getting higher lows. You're just hitting this door. You keep kicking this door over and over, and usually you get an explosive move. And another reason I like it, because it does, in my experience, have a good high win rate. It says on here, wherever you look at, 73 to 83%, which is a very high win rate. And you got to see it on AMD on Friday, or Thursday, excuse me, when it took off. Descending triangle is what was on Upstart. We talked about the opposite, lower highs, but then kicking the door over and over and over. And it also had its 200 moving average, by the way. And this is a chart I posted on September 24th with Upstart for you guys on the Patreon. And you see the 200 moving average down there. You can see it's also got a double bottom, which is why I said this could break either way. And you can see right there, there's a double bottom. But as far as the descending triangle, you saw the lower highs being set, while at the bottom, it just keeps kicking that door, the 200 moving average, that level right there. And then, of course, once it was done kicking it, absolutely exploded lower, as you can see right here on September 29th, I believe it was. And so again, this one's coming down in some areas we already had marked out. And when we look at this, you can see on the fibs are in a major discount, okay? Below all the moving averages now, which is not good. So if we do get a retrace back up, which eventually you do get this, because watch this formation down here. I've already showed you about these imbalances while I marked this out. If it can hold that and get a bounce from there, that is bullish, okay? Because here's your moving averages all starting to curl over. That's not a good thing to see. And understand, this is not an Upstart problem. This is a fintech problem. These move in unison a lot of times. The firm's down, PayPal ain't doing nothing. You can see XYZ's in the downtrend. SoFi, look at that one. That one's going to 20 if it doesn't bounce now. Toast, I don't know anything about. That one's in the downtrend. So you need the sector usually to start to pull up. Okay, now Upstart's one of the more low float, higher shorted stocks, so it tends to have these huge swings. But yes, you need to be holding this area or the one right below it there, and then just see if you can get back above the 200 in that trend line. They're about meeting the same exact place. And so if we get a rejection, heading down even farther. If not, then we can break up. But the whole sector has to move. So I hope that makes sense to both of you. Now, next one says, Mike, how do you see Tesla going in October? Boy, Tesla, every time you count it out, it bounces back. But in this case, again, deliveries were good. We knew they were going to be good. $7,500 EV tax credit goes away. then you get a 10% drop. It's bouncing at this fib right here at this support level, but it's below this trend line now. It was able to close Friday in the area where it was consolidating for so long right there. So the question is, we come up, we're going to hit this trend line, reject down, and finally get like this 398, 402 area to be mitigated. Okay, that's what everybody's going to be looking for, and fill that gap. And if that doesn't hold, say la B, we're heading down to like 357 to 370, somewhere in that range, down to this trend line and stuff right here and support level. So that needs to hold. You don't want to count it out because they do have a meeting coming up. They're going to start talking about Optimus a lot more. So every time you count this one out, go, nope, it's going to die. Elon will say something and go, look, here's an Optimus robot walking down a hill. And the next thing you know, it pops 5 to 10%. Okay, so it's really hard to count this one out. But you need to get above that trend line to start heading back up to make a charge to 500. It is crazy. They came within $6 of the all-time high to send it down. That's crazy to me. But anyway, hope that helps on that one. Gary says, can you cover DocuSign? It's definitely a falling knife. Yeah, this one's a mess. ChatGPT is doing to it what it did to Adobe. They launched some kind of program. And so you can see this one hadn't even participated in 2025 anyway, so it was already coming down. But I showed members this one for a breakout, actually. It was doing this rounding bottom, had that trend line, was testing, had a 200, but it just failed. And then it got the news, boom. And so it's falling out of all of this right here. It is in a bounce zone, as you can see. Again, it's in a major discount. Below that, though, is where you really got to hold. If you come down to like 63 to 66, that's where it has to hold if it decides to take out that August low right there, is what I've been looking at. But understand, if it comes back up, what you're looking for is a retrace back to that 50 fib level right there and see if we get rejected. That's exactly what I've been looking for on this one. Again, when you get these quick moves down, you know how they love to retrace, okay? And that 50 just lines up with what used to be support and resistance area at 77, 76. And so if it rejects there, say low B, coming back down. Again, if it can close above it, then you may head toward that trend line and get another test there. But this one hadn't participated in 2025 at all, besides the big, of course, swing trades. Now, Kirk says, Mike, in your opinion, what do we look for in the charts of the OKLOs, NNE? This is the high beta ones and these theme names. Because they're so high beta with no revenue, I watch news and try the best to track technicals, but understand that there is little sense to the gains these tickers have, so it's a crapshoot. Do reversal patterns still apply to these tickers? The answer is actually yes, and I actually did like a members video just the other day on the nuclear energy stocks, and I covered these, and the SPACs are back, SPACs, right? They were $10, that's what OKLO was, and a bunch of these, and now they're just taking off. They just didn't do anything when they launched before. They lost like 99% of their value, and so the reversal patterns you're looking at, double tops, head and shoulders, engulfing candles, these do exist. Some of them work out, some of them don't, and this is OKLO, probably the most popular one right now, and you'll see, double tops where you're like, oh, okay, that's a double top up there, didn't work, okay? You'll see there's a lot of these. When you come through here, to me, when I look at this one over here, that looks like a head and shoulders to me, And again, did it play out? No, not really. So it'd be probably down this area if it played out. It did not. And so it ended up bouncing there. What OKLO normally gives you, though, it will give you like a retrace. And so if this comes up here, see if this is a double top. See if it comes in pattern, right? See if that plays out right there. So you can get those. But normally when it pulls back, the last few times, it would come down at least a 50 fib, golden pocket fib before the bounce. This time, it didn't do that. As you can see, it came down to 0.382 and bounced. But the last few times it's done that. It keeps forming these bull flags up in this channel and just keeps going because, remember, these are lower floats, very highly shorted stocks. And so a lot of these stocks can be manipulated by retail. Some of them only have like 20 million float. That's it. There's 20 million members in Reddit alone. Okay, we're talking about worldwide. People are piling into these stocks. Okay, so you got to remember that. And here's double tops. You see some of them played out, some of them didn't. So there are reversal structures, and you're right. I mean, this is, if you go back and just look at 2020, 2021, we saw the same thing happening where you're like, how is a stock up 800% in like 60 days with no revenue? And it just keeps pushing, and it keeps pushing, and it keeps pushing. Because every time there's a dip, retail's piling in, and now you get to use the options market more than ever to help with these stocks. And so, I understand what you're saying. And again, these are the hardest to chart for me. And they're such high flyers. I mean, if you get caught at the top and all of a sudden it's a 30, 40% move down haircut, that sucks. That really does suck. But again, like NNE, this one right here, I think that float is like 20 million. Don't quote me on this. But, will it break that trend line? All these other stocks that do, take a nosedive, what to see. And when you look at the support levels, some of them are hard to find, and they're so far apart. It's crazy. I mean, you're talking about 20%, 40%, 60%. And so, yeah, they are hard to chart, hard. I mean, if you got any secrets, let us know, any tips. I'm even using these anchor VWAPs now, as I was talking about in the members video, to see if that helps at all, because those usually are support and resistance on normal stocks. And so we'll see if that's going to be the case on these. So hopefully that helps. Here's another one. BBAI is a whole nother one. This is a pretty hot stock for retail, as the person just said. You can see with this one, we got some anchor VWAPs on here. There's a double top forming now. Will it work out like to see? This was $10. This, I'm pretty sure this used to be a SPAC, SBAC. And so, now they're coming alive. It lost all its value. And so we'll see if this is going to be a double top or not. That's what you got to find out. Again, 261% in like a couple months. And that's nothing compared to some of these. Some of these are going up 600% in a couple months with no problem. And so we'll throw an anchor VWAP right here on the IPO price. And I know definitely once they get above that, they tend to explode. So that's actually working out. And so, we'll mark that level out as well. You can see when we eclipsed it right there, immediate sell down. That was a huge sell down from $9.74 to $2.50. You can do the math on that one. But when I throw some lines on here, you can see it's just wedging. So it's setting up for another explosive move one way or the other. So we'll see which way it goes. Irene's another one, IREN. I did find something out on accident on Friday on this one. I'll let you know. But this one, I mean, look at this. Look at this straight up, 916% in 160 days. Look at this one. I mean, it's just straight up. I mean, what move is that right there if we look at it? And so it went from 22 to 50 from August 20th to now. I mean, so what are you talking about, 43 days or something? That's crazy, right? And so, you throw some stuff on this, trend lines, everything else. Here's some support levels. This is what I'm talking about. Look how far down the supports really are. If you're looking at true supports, you throw some fibs on here from the bottom right there at 5 to 1593, and we're already past all the fib levels. I got to redo this thing. But when I say lower float, this is a lower float type of stock, right? So it's 252 million float, 13% short, which is actually not bad for a lot of these. 367 million revenue, $13 billion market cap. And it checks all the boxes, by the way. It's a technology company that operates renewable energy powered data centers for high performance computing, also does Bitcoin mining, AI cloud computing. And so this thing checks all the boxes. And so this was going to get all the algos in it. What's interesting is the 52 October 17 calls had 21,000 contracts bought. I don't know why. And if you look at all the rest of these, it's nowhere near that. And so interesting to see that one. We'll see if that's going to play out or not. There's some kind of explosive move coming. But you look up any of the other strikes, nothing like that. So very strange. I came over Cheddar Flow. I saw that and I'm like, okay, let me look it up. And that's where you can see it. So we'll see. They're expecting. It looks like they're expecting a bigger move. No doubt about that. Next one here says, "Hey Mike, any thoughts on DraftKings?" Thank you very much. Yeah, one of the members was asking about this too. Again, this has been hammered, beat down, coming into a trend line here. Didn't quite touch it, but you got many bounces off of this trend line right here. Came down to support right below it. That's where it bounced into a daily FEG or imbalance. That's where you're getting the bounce for now. So if it does come down, watch that trend line to see if it holds right there. Because it's in a major discount from the top. This is another one that has not participated in this run up. It looks like from September to now, really it's just, I mean, if you look back in 2024, just been range bound, right? From like 30 to $50 right there. So some good swings for people. When I look at this, man, I know this ain't a technical head and shoulders, but boy, on the weekly, it sure looks like one. So again, if that trend line breaks, say hello to my little friend here, because we're going to be coming down even more on DraftKings. But if we can hold around that trend line area, around that imbalance, start to bounce, and you pull some fibs up on this thing, watch this level right here between 38 and 40, because you see those imbalances. If it comes up, rejects off that, we're heading lower. If you can close above it, that's bullish. And then, of course, with all that liquidity above to mitigate, then you can see some upside. But you need to get above that level. Okay, so 38 to $40. Somewhere in there is what you're looking at to really be bullish on this. Next one here says, "Hey Mike, thanks for all your hard work. Could you cover Wendy's chart sometimes?" I will, and there's not many charts where I go, holy moly. But this is one of them. My goodness. I mean, if you're sitting in this thing from the top, I feel terrible for you. Because it's literally done nothing since 2020. 69% down. That is incredible. Down to $9.57. When we look at this thing, I guess the good news is when you pull it up, you can tell it's at a key level for a bounce. But we'll pull up the MACD and RSI. This is where I guess if you're looking for good news, I think you might be getting some good news. And you can see right here on the daily, you end up with a bullish MACD cross. You got the RSI close to being over 50. So that's a good thing. Okay. When we pull out on the weekly, you can see bullish divergence, right? I mean, you're setting higher low, heading up, and this is setting lower lows, right? So that's going on, obviously. When you look at the level it's at, you're at a bounce or die level, going all the way back to 1993. That area right there where it bounced from, that is a big area. You lose that, there's a good chance you're probably going to take out your 2020 lows right there. So you definitely want to hold this. Look at that trend line right there, the trend line from hell. You look at that right there, boom, you get above that. Maybe you're cooking with some Crisco. Maybe you get some money rotating into this. But again, this ain't AI stock. They need to get a hamburger named AI or something. I'm just kidding when I say that, seriously. But, you know, these restaurant stocks, some of them are just getting absolutely hammered. It's not just a Wendy's thing either, okay? Now, next one says, do you think UPS is in the second stage? I'm assuming he's talking about the Weinstein stages of a stock. And the answer is, heck no. Good Lord, no. This is stage 1. That's stage 2, the big one. Stage 3 here. Stage 4, we crash, right? When you go back to this one, again, stage 1 don't have to be this long, drawn-out process like you saw with ARK, which we'll look at, and it's in a bounce zone. But, I mean, no, that's definitely in stage 2. I mean, there's no way it's in stage 2. Again, it can get a crazy bounce, and it's in an area where it has to bounce. I mean, this has been an area of resistance going years back, decades back, okay? And so you hadn't hit the 0.79 fib yet, but you've hit that area where it needs to bounce. We talked about UPS a couple weeks ago. That's why I already had this charted out. I remember talking about it. But these moving averages right here, this is the Weinstein moving averages. And if you go to like a weekly and you look at this, you got to get above that to even be considered in stage 2. By then, of course, it would have moved up, you know, a decent amount, but you can see how it's just getting rejected off that moving average, right? And so you got to get above that. That's just the way it is. And when you pull up RK, you'll see what I'm talking about. Stage 1, stage 2, stage 3, stage 4. And now we're in stage 1, breaking out into stage, it's already in stage 2, right? So it broke out, and that's the stages, okay? And it don't have to be, stage 1 do not have to be anything like that. Stage 1 can be much shorter than that. Every stock is different. I mean, this one's been hammered into dog meat. And we compare this one to FedEx, right? The FedEx chart looked way better than this one. But I did say, I was like, well, this is on my list now to look at as maybe a play where you go, okay, we see what the stock market loves to do. See how that's stage 1, stage 2, stage 3, stage 4. So again, we're still in stage 4 because it's still going down. It hasn't broke a downtrend yet. It's not above the moving average, okay? And so at least some kind of consolidation will be nice on this one, but yeah, I mean, hopefully you get a bounce there because I assume you're in that one. Last one here from Dr. Marcus. Welcome back. A bit of a fun one. Do you believe in the correlation between the McRib and McDonald's launching and how it correlates with Bitcoin going to the moon? No, I do not. I love the McRib. My wife makes fun of me for it, but I also know the McRib comes out in the fourth quarter, and I also know that's when Bitcoin and most of the alts tend to do really good, especially Bitcoin though in general. And so that's why this happens. You can freeze this, look at it if you want to. Again, I love the McRib. I'm probably one of the only person, I guess I'm not the only person that does because they keep bringing it back. But still, no correlation whatsoever. It just happened to come out in the fourth quarter. So anyway, hope you guys got some out of it, man. Please hit that like and subscribe button on your way out. We'll set up the week and tomorrow's video for you. Think about signing up for the membership, left the McDonald's combo at $7.99. All you gotta do is hit the first link down in the bottom. It's everything you get with it. And I'll see you guys tomorrow.